you do sign off on a PG, you're hitting your personal credit score, and that limits your future options, right? So personal guarantees limit growth, leverage, and also peace of mind, because if you're a business owner, and I don't know, it's an odd thing, but I usually see when businesses are going out of business, right? And we know that the data is there that 50% of businesses, if not more, will not make it through to their fifth year. So understanding that you have a great idea, etc., there is a strong possibility that that business might not survive. This is one of the primary reasons why you want to make sure that you have separation so those assets that you currently have aren't being exposed. You were touching on that from a real estate agent perspective. The PG increases your debt to income ratio. That's on your personal side. And you mentioned one thing that I didn't push back on it just a little bit, is that yes, having an impact on your personal debt to income ratio doesn't mean that you're not going to qualify, right? It just means that because the ratios will probably be out of balance just a bit, that's going to cost you just a little bit more. Capital always has a cost, right? That cost is usually
Yeah.
going to be
Yeah.
determined by your risk in the form of interest rate, right?
Mhm.
So this is the primary reason I believe that you want to avoid providing a PG, because a high DTI blocks you on a mortgage, auto loans, right? And also future business funding. Now,
Yes.
we're not talking about real estate investing in this session today, but one of the things that we've been able to do and how we even came to know about business credit is when we were doing fix and flips, right? We needed capital so that we can fund the renovation, right? And we weren't
Mhm.
being given capital only in the name of the business. That's the reason why we came to this. We had perfect credit scores, right? But when we went to go and apply for credit using just the EIN number, I think our first limit was $5,000, and we're like, "What are we going to do with this? We don't need $5,000. We need $50,000."
Yeah.
Anything to add?
No, that's it in essence. That hey, it does affect your other avenues, whether it's looking for other loans, looking for growth in other areas that will need some type of funding. It does affect those. So it may, and when you don't need it, for example, when you don't need no anybody to be looking at your debt to income ratio, you don't think about it. You think, okay, no, it's okay. Until such a time that you are in need and you need to make those moves, then that's when it's you're going to feel that impact and then think about, okay, maybe I shouldn't have. And at that point, sometimes it's a little bit late in that you can't necessarily just go and say, hey, let me just pay off and then get everything back into order and then go and get whatever I wanted to do. So, you as a business owner, you always want to prepare. You don't want to be caught by surprise. If you are able to prepare ahead, it helps you be able to be in a position where you can even fully capitalize on opportunities as and when they come versus um, trying to blow out fires and then going to get those opportunities.
No, and I just know that it is an enormous amount of stress when the entrepreneur is trying to balance what's needed for the business versus what's needed at home, right?
Yeah.
That is an enormous amount of stress. And I believe that that forces burnout or leads to burnout. And that has an enormous risk on you personally, right? Because as I always tell people, the airlines got it right. Before you can help someone else, you have to put on your
Help
mask
yourself.
before you can help them with their mask,
Mm.
right? So the reason why I believe people are going into the entrepreneurial route is because they're looking for a freedom. And by a freedom, I mean they're looking for either financial freedom, time freedom, or location freedom, right? And when
Mm-hmm.
you put a guarantee or become a co-signer for your business, you are actually moving in the opposite direction of where you want it to go, right? So, yeah, if you're going to a traditional bank, right, they're probably going to say to you, yeah, you're going to have to provide a personal guarantee, right? And why is that? Because banks love personal guarantees because
Yeah.
it removes their risk. Let me repeat that. It
Or
removes,
reduces that risk.
well, it reduces their risk, but it also removes their risk because that asset would have to basically cover the debt that you are taking on, right?
Mm.
So if you want, basically, they're only going to allow for you to cover that debt with probably 80% of the asset, 75 to 80% of the asset, right?
Yeah.
So if you go in for $100,000, the house has to be valued at 125 to 150. It's removing their risk because they know that if they have to move to that third rail called foreclosure, the asset is going to be able to cover the obligation. And
Mm.
then at the end of the day, this comes at a grave concern to you because it's a cost on your future, right? This high DTI, or if there is a bankruptcy and you're personally guaranteed against it, there's going to be a cost for your future.
Yeah.
So we dug into today why you shouldn't have a personal guarantee, right? Let's talk about and close out today's session on how to avoid personal guarantees. You start us off, Eunice, on this one.
How to avoid personal guarantees. The the best way I know how is
Hmm.
to make sure that you establish business credit, because once you have established business credit, whenever you are looking for financing, you are doing it using your EIN versus your social security number. Then there's that distinction.
That is the absolute perfect start. One of the things that I tell folks who reach out to me on their journey towards building out business credit is when the application is asking for your social security number, avoid putting it there. That's the best way that you know that they're not going to be able to run your personal credit is because you never provided it to them. Have them run the credit just on the EIN number. That is the perfect solution. Never give them your social security number, right?
Now, with
But
that said, the question that I hear sometimes is this something that you can do at any lender, or are there specific lenders who will take your EIN and not insist on having you as a personal guarantee as well. Because there are some who will say to you, you can put in your EIN, but we also, on top of that, we also need your social security as a guarantee.
First and foremost, a personal guarantee is a last resort, right?
Mm-hmm.
In
Yeah.
every lender or financial source or funding source is probably not going to be the right partner for you, right? So if they are insistent upon you filling out your social security number, I would say walk away, right? Because there are funding sources and lenders. We know plenty of them that will allow you to move forward with just an EIN. But
Mm-hmm.
you got to understand the reason why the lender is asking for a personal guarantee. The reason why a lender is asking for a personal guarantee is because they've looked at your business credit profile and it's not healthy, or there is no credit profile there, right?
Yeah.
Or the business is young and probably isn't showing revenue. And if it is showing revenue, the revenue could be inconsistent,
Mm-hmm.
right? You typically want to have about 6 months of consistent revenue showing on the bank account. And we spoke about it in the past session, but you want to try to have an average balance of 4 nines on that bank account. All of this is available to you, right? And
Mm-hmm.
finally, you as the business owner haven't positioned the business to be fundable. So you have failed on your business if it hasn't built out its credit profile, because we know that cash flow and liquidity are like the oxygen for your business. Without it, your business, like I like to say, you don't want to have your business on a diet. You want to
Mm-hmm.
have access to credit lines, etc., such that when opportunities come available, you are able to take action.